Hi TC, that was the stock of yesterday. Will it be the stock of today? And what is the brokerage community making of the demerger which has been announced? Abneesh Roy joins us to talk to us about all of that. Hi Abneesh, good morning. What's your sense with respect to this demerger? The structure, is it coming as a bit of a disappointment?
Yeah, thanks. No, the structure is not at all a disappointment. This structure is the best structure. This will allow that ITC Hotels continues to get synergy benefit from the overall group. If you see, they do have back-end sourcing, for example, from agri. Similarly, in the foods business, if you see clearly the R&D and the expertise which the foods business has, and again, very good synergy benefit with ITC Hotels food business. So those things will continue. If they had made a 0% holding, then obviously this would have become a takeover candidate and then there would have been no control. So this is the best structure wherein the synergy benefit is there, the stability is there, and definitely the key concern which ITC stakeholders had, that this was a cash guzzling business with 22% of the capital getting allocated here. But in terms of revenue and profit, it was below 5% and return ratio also in single digit. So that concern also goes away. So I would say this is the best structure. And definitely in the next 12 to 14 months or 16 months, when the ITC Hotels business also lists separately, post all approval, I think investors will appreciate that this was the best structure in terms of taxes, in terms of the stamp duty, in terms of everything. This was the best structure. Having 0% or having 51%, that would not have been the ideal structure. So 40% is a good one, because the current shareholders of ITC continue to hold 100% stake in hotel business even after listing, because 60% will be direct listing and 40% will be via the ITC. So 40% is getting you all the tick marks in terms of all the above reasons. So right.
Do you expect that there could be royalty which now ITC could be charging from the hotel business? Because if you are giving the brand ITC Hotels to a subsidiary where you don't have more than 50% stake, technically you can command that royalty for brand usage, the Welcome Group brands, the ITC, all the other famous brands they have in terms of hospitality?
I think that's a fair question. Normally, we do see that this kind of a royalty structure is there. For example, in Britannia, Wardias charge royalty. Similarly, in case of all the multinational companies also, there is a royalty aspect. So we'll get more clarity on these when we have the con call in the next few days. And also on 14th of August, there is the final board meeting and we'll have more clarity on the market cap and the number of shares, etc. But that assumption, I think it's a valid question that there could be royalty. They have many brands. So obviously, wherever ITC brand is there, there could be a royalty. That clarity we would await in terms of the con call which will be held.
Now, Abneesh, if I look at a slightly longer term time frame for ITC, could this be a PE re-rating moment for ITC, because cigarette business is generating cash, FMCG is free cash flow positive, and hotel business, which was a guzzler, no longer will take capex, which means there could be a marked improvement on return on equity and return of assets for ITC?
Yeah, absolutely. We have the same view. In fact, that's why we have ITC among our top picks for a very long time. So yes, in this annual report which has come out FY23, again ITC has clearly shown that a rational tax policy is the best for the government, best for the consumer, and best for the overall industry also. So we have seen clearly market share gains by the legal cigarette players, and this year also it's continuing. That's why in Q1 also we expect a healthy cigarette volume growth. If you see even Hindustan Unilever, which is a FMCG staples company, has seen a 3% volume growth. So clearly ITC cigarette volume growth is ahead of that. So that is coming because of market share gains. Similarly, in the FMCG business this year, because of the commodity meltdown, we should see margin expansion. So yes, the leftover ITC, which is the main business, 85% of the profit, and clearly the market cap also comes essentially from the non-hotels, that return ratio will clearly improve. And this has been a key concern. But I don't think the hotel demerger should be seen as a precursor for the demerger or value unlock of other business, because hotel business had its own issue of very high capital requirement and very high volatility in business because it is cyclical and low return ratio business. Rest of the other businesses, if you see, don't really have this kind of issue which hotel business had. So that is one thing which we also need to know.
Thanks very much for giving us that clarity, Abneesh. Good to have you on board. We'll be certainly watching out very closely for ITC